Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for June the 3rd to the 7th, 2019. So, welcome to June. I'm sure some of us, and probably the majority of market participants, are probably happy that May is behind us. It was quite the wild month, and if you're a fan of seasonality, then it was a very interesting month. So, this coming week, we still have a lot of headline risk, so that continues to be the name of the game. Unfortunately, a lot of the actions happening in the pre-market after our session, and so the markets are doing their best at what they usually do, and that is to confuse people most of the time. And so we're getting a lot of gaps, and that makes trading difficult as number one, it's hard to obviously manage your positions as you're managing around gaps, and secondly, it's even hard to enter in trades because sometimes it's not getting to the levels you want to get filled at before gaps over them. So it's definitely a tricky environment if you're having a hard time. Again, the name of the game right now is capital preservation. If you can make money to the downside, that's great. If you can't, then just try not to lose money, right? That's the name of the game. So this coming week, we're still in earnings season. There's still a lot of names reporting, and the tech sector especially. We do have some macro news. There is the jobless claims report on Thursday morning, and the unemployment situation on Friday morning. Normally, I would say that's quite important, but again, the headline risks and all the tariff talk, that is what's moving the markets now, and that's what could possibly change things, at the drop of a dime. So, unfortunately, you can't really plan around that. The best you can do is plan around your trades. So let's get into the charts and talk about the month that was, and let's see where we go from here. So let's begin with our VIX chart. We'll begin there, and we'll go back and unpeel the onion. So VIX, nothing much else to say than what we've been talking about already, right? So here's the thing we've been talking about for a while. On the bottom right hand corner, we had that outside, inside, and down situation, and then basically it came back through the range again. And so that was the issue at hand, was that once once that pattern broke to the downside and then it came back up, you then have the chance of it coming back through the range. So if you see this weekly chart here, we hit these all-time lows previously at 25.94 at the end of April, mid-April, and then May, basically we spent the whole month coming coming back up through the range and just kind of chopping back and forth there. So this past week, what I want to mention in last week's video was to watch out for this inside bar reversal, right? So SPY and Dow had inside bars, and the question was, how are they going to resolve? I'll talk about those in a few moments. VIX was this situation, was inside bar and down the previous week. This week I said if it closes above or even cracks above this high here, then the VIX buyers are back in control, and they're going to go after that pivot. There's your inside bar reversal that's playing out now. So on the daily, it's just a steady grind higher. It was a short trading week because, of course, we had Memorial Day on Monday. But on Monday here, we had that, a slight lower open on the VIX, but then they quickly took control and they turned it to an outside bar to the upside. And now it's just been momentum. Outside bar up, came back in a bit. They could not break. Look at that. That's the quarterly open right there, that blue line. You see the resistance there, support I mean? That's your quarterly open. Still acting as a strong level of support. That 8 EMEA is right there as well. Goes bam, bam, and then, goes back up again on Friday, although closing red. Today, not giving you much more than, 1, 2, 3 bars here, and they all have higher highs right now. Higher highs, lower lows. So all you can say about VIX is that it's going up. It's going up. Okay, on the 4-hour chart, we end the week with a inside bar. So where do we end up? Where do we start the week next week, right? Does it go inside bar and up, or does it go inside bar and down? What the market's doing right now, when I said before about it doing its best job at tricking most people, is that this is what it's been doing. It'll break down first before coming back up again on the VIX. The opposite is for the indices. So for a moment, it looks like the buyer's in control because VIX goes down, but then that plays out for like 4 hours. Then the next bar, the sellers retake control, and VIX buyers retake control, and they crack back above it, creating that inside bar reversal. So there's your inside bar reversal on Monday. As I mentioned already, we broke down in the morning on Monday, but then they took control and went outside bar and up, right? So you can see that strength there, outside bar and up. Here, VIX broke down again on Thursday, right? So people are like, hey, VIX broke down. But look, once it takes out that high here, right, then it's inside by reversal, and they're going to go after that pivot. That's what they did on Friday morning. They took out that pivot and that pivot. So anyone who got short here, thinking that VIX was going to come back down now, they got stopped out in that little sequence. This little black line there is your 200 EMEA. I don't use the 200 EMEA for any trading decisions, but I think it is important to look at because a lot of people do. Now, and interestingly, there you go. That could just be random. The VIX finds resistance right there on Friday. At the same time, what bears pointing out here on a water time frame is that all the indices have now broken below their 200 daily EMEAs. So Russell and Dow had been below them for some time now, but this past week the Qs and the SPY finally broke below that 200 EMEA. So we're certainly, again, I don't subscribe to any trading setups around the 200 EMEA, but I do know that people, use that quite widely. Whether or not it has any real statistical significance, that's for you to do your research and to create your own ideas around that. But for me, I'm using that as an indicator of sentiment. So back to the VIX. So someone had a question for me, and the good question was, why do we have this, the indices making fresh lows and the VIX is not creating newer highs? So you'll see the index charts in a few moments here, but the VIX is still, again, below the week prior's highs. So not last week, but the week prior's highs. Why is that when the indices are going lower and lower? And I don't think anyone knows at this point. I think that's the issue here, is that no one really has an answer for that. And for the reality is that we may not know or ever know, and if we do find out, it may not be until well later. So our job as traders is to simply react to price, and perhaps with time and enough reflection, we'll be able to find out why that's the case. I have an opinion about that, and it's a pretty simple one, is that I don't think we've hit a major inflection point yet. I think there's going to be more selling because people are not reaching for the VIX yet, and the VIX is simply just to dummy it down. It's simply a reflection of the amount of fear in the marketplace based upon the put call activity. So right now, people are not rushing out and buying a bunch of puts yet, so the fear isn't out there yet. So until we start seeing this fear barometer, if you want to call it that, so I wouldn't, I don't subscribe necessarily to that as well. People also just trade the VIX outright without any care for the puts and the calls. But to me at this point, it doesn't appear that we've hit a major oversold area yet, because there's still a lot of room for the VIX to wiggle up. So I think we still have a lot of room to the downside. Whether we get there in a straight shot or not is anyone's guess. But the fact that we're trading underneath this now, we still have a lot of room to the upside. These two blue lines are your that's your unfilled gap here at 32.45. If you break below this other one here, that creates an inside bar and up scenario that can break up and then take out these other pivots up here. So yeah, that's something to watch out for. The VIX has a lot of room to the upside. So let's go on to the next index, as we do have a lot of ground to cover. Let's talk about the SPY. And so before I jump into the SPY, let's just quickly look at the seasonality effect of May. So whether, there's a very famous adage that says sell in May and go away. And I did a bit of research around that, and there actually is no pronounced negative bias for the SPY for the past 10 years. In fact, May tends to be a positive month over the past 10 years. We can go off to do our larger study. But for the past 10 years, neither SPY, Qs, or Russell have had negative May months as an average, as an aggregate. Dow, on the other hand, does have a net negative bias for the month of May. So that's interesting. Over the past 10 years, the Dow is the only index where the month of May actually, as an average, was negative. So there may be something to that adage for the past 10 years, specifically to the Dow. But going to the SPY, this year, obviously, the sell in May and go away effect really did kick in, and let's talk about it. So like I said, if you're a fan of seasonality, then basically the SPY hit the all-time highs on that first trading day of May within the first 4 hours of that trading session, and never looked back. It's been straight selling ever since that first trading day of May. So that first trading day of May, if you look at it right there, it would turn into an outside day, right? So there's your outside day to the downside. Now if you actually drill in here, let's say first let's go to our intraday chart. We'll jump to May. There's May, and let's look at the 1 hour chart, and we'll go back here. Where were we? So there we go. So there's May right there. Here we have our open, and it goes inside bar and up, but turns into an outside bar. See, so there's your inside bar reversal. It bounces. There's some buyers step in. They step up here. They create a newer high. So here is your all-time high right now for the SPY. That was created at 130 on May the 1st, and then it just sold off for the rest of that session. Okay, that created that outside day, because then you had a higher high, higher than the previous day's high, and you broke below that low, which created the lower low. So there's your outside day in 1 hour bars. Interestingly, on the 30-minute chart, this here just shows you how traders get trapped. Okay, so let's go back to the May 1st scenario right there. So there's the 130 bar right here. It goes 130 to 2 o'clock, and then it breaks down, right? So look at the scenario here. Inside bar reversal, right? So here it goes inside bar and up. The sellers take control. Once they break below that low there, these guys who bought the inside bar up scenario, they're getting stopped out, and then they stop out everyone in this range. So really nice pullback there that took out a lot of stops, because you can see just how aggressive that run down was on very elevated volume. So that took them all out there. All right, so that's a went to all-time highs, and then you pulled back. So there's that's the effect of seasonality that past month, because again, to drill it down, we've talked about this in numerous videos, and if you haven't already watched it, I would definitely recommend checking out the video I did on my examination on major market reversals. But how you interact with the opens around different time scales is very important. So I just turned on the lines for the monthly open, the quarterly open, and the weekly open, and the daily open. So the green line is the daily open. That's where it opens. The orange line is the monthly open. So right here, you can see the monthly open here is acting as resistance. So right there, where it opens up, right? So the market gaps up on May the 1st. It acts as a natural level of resistance. That's the open of May, the monthly open. And every time it tries to crack above there, sellers step in, right? And they're forcing price back down again. And so there you go. There's your inside bar reversal, and it breaks down. Once it breaks down below here, right, that turns the weak red. So there it turns your weak red, and then you get further selling. Then you get your new week over here. Okay. So that was a very interesting price action, and maybe while I'm at it now, I'll just quickly discuss it. So if you recall now, if we go back to the Russell, if you recall, the Russell actually went on to create newer highs the day after, actually several days after. So here's May. So here's May on the Russell. There's actually a red day, but then on the day after, it rallied. Well, went up, came down, but went back up, and then it created two new highs, right? If you recall that scenario on the Russell, it was very odd, right? Because you had the SPY, coming down. SPY and Qs are coming back, we're pulling back, and the Russell actually went on to create fresh highs. They didn't make all-time highs, because Russell never hit all those all-time highs that were back here, but they created enough new highs to lure in new money. But you can see once again, there's your weekly open, there's your monthly open, and once it breaks below, goes outside bar and down, there's momentum to the downside. And we've had nothing but selling now since basically, you know, the you can say the 6th or 7th the 7th of May. It's just been, selling action to the downside, and lots of room still to go, by the way. So let's go back to our other charts here now, and let's continue to do our analysis. So on the SPY, I thought that was interesting in terms of a time frame analysis and seasonality perspective. So on the SPY, there's nothing much to say other than, number one, it's an outside month. So now the month is done, it's closed out. We have an outside month for all the indices. Okay, so the question now is, what happens and what's the next bar? So does it go outside bar and down and keep going? Right, that's going to be momentum, because right now there's momentum. So if we see this, it breaks to the downside. You know, if you're a seller, you want it to keep going. Okay. Otherwise, you don't want to see a situation where you go outside bar and down, comes back up, because if it goes outside bar and back up again, you can go back up and take out these, challenge that bar. But for now, until that happens, it's going to take, again, another 2 months for that to play out. Right now, the next step is what's going to happen. What's the next bar going to be? Is it going to be outside bar and down, outside bar, inside bar? And it's going to be a tall order for it to be outside bar and up, because you're really, really far down here. This is a 6% bar. Anything's possible, but right now, it's not looking like it's going to open up here and go outside bar and up. More than likely, it's going to be outside inside or outside bar and down. Okay, so make your plans for around that. Last week, we talked about the inside week and how it was going to break. Look at that break, right? So it goes inside week and down. It closes right on the lows. Easy trade, right? Inside bar and down. It was sell all week. Now, that being said, it's choppy. It is a bit choppy, right? So here, there's a new week. It goes down. You got to get filled. Comes down, pops back up and down. So you had 4 trading days, so you had to make it count. And once you got that inside bar break to the downside, right there, right? So basically on Tuesday, it was just selling for the rest of the week. That was a small pop-up day, right? They try to take it. Remember I don't know if you remember this or not, but on the newsletter I send out, I mentioned that Thursday. I can't remember how long the study went back for, but from the guys at Quantifiable Edges, they said that historically Thursday has a positive bias. I think it was for studies across 30 plus years, and so Thursday actually did have a positive outcome, but not enough to affect the actual overall negative bias of the week. So yes, Thursday had a small bump up, but the selling just basically kicked into high gear on Friday. Okay, so Spider. On the 2-day chart, nothing else to say. This is just a straight selling market. Look, we had that inside bar 2 weeks ago. Went inside, right? We were watching that. It resolved to the downside. It's just been going down since. So this is just selling. Selling begets selling, and there's no indication right now that it's going to stop selling. So I'll just put it that way. You want to see, price reverse here, and you want to, ideally, if you want to hit a bottom, you want to see some people get trapped and getting themselves too extended. So right now you're not seeing that. People are not pushing it that much yet, so there's still a lot of opportunity for this thing to go lower. All this could change, of course, on a heartbeat if something comes from the White House or around tariffs, and that could all change things. But right now the trend is certainly down. If you're following just price, then right now price is telling you that it's going down. So on the 4-hour chart, so here's your, this is from last week. So we talked about this, what happens on that at that open. So it goes up and goes inside bar and down. So it went up, gaps up slightly, right? And then they sell it, and it goes outside bar and down. So inside, outside, and down. Inside bar goes up, right? Traps in the buyers in the AM session. So here on Thursday, people thought, hey, we have this positive bias potentially. They buy it, then the afternoon comes around, and it goes inside bar reversal to the lows. Here, they fought back up again, creating a bit of a hammer. People were feeling pretty good, maybe optimistic about things. Maybe that was the bottom here. We have a hammer there. It's a higher low. No. Friday, we close at or close to the lows. So inside week and down. So from here, where we go, it's anyone's guess. But look, we have a lot of range we can reclaim here. So we have a lot of range to go back to, December's lows. So we definitely have a lot of potential to go back down here. This next pivot is looking very good right here now. This outside bar low right there, back on put in on March. So there's a lot of opportunity for this thing to continue to go down, because you still have unfilled gaps to the downside here. There's actually a bunch of them that could potentially be areas for the market to try to reclaim again. So right now, the bias is to the downside. As I've been saying for a while now, we have full time frame alignment to the downside. We're trading below the quarterly open. Now we have a new month coming up on Monday, so we definitely want to be seeing new month, new week, how we trade around that open. So if the buyers are going to take control and try to wrest it back from the sellers, that's their opportunity is on Monday morning to try to regain some of that time frame control. But if they can't do it, then the sellers take over again. We're back in full time frame alignment to the downside. So if buyers can take control for that time being, then you do have a bit of conflict, right? You're going to have the quarterly up, down, excuse me. Then you could have the monthly and weekly up. So then you're going to have that quarterly conflicting with your perhaps long buy and week signals, month and week signals, right? So that's going to be a bit of conflict there. So then you can expect choppy trading. So imagine here on the Qs, if somehow the buyers step up here on Monday, they push it up here. Here's the quarterly open. Your monthly open and weekly open are going to be down here somewhere. So if they push it back up, you're going to be stuck and playing ping pong in between these two areas until maybe you come back up here again, and before it comes back down for more selling pressure. So we'll have to wait and see. So for the Qs, outside month and down. Nothing more to be said about that, right? Look at the weekly, red week. It's just been going down week after week after week. It's not taking out any of the prior week's highs. So if you want to see a bigger reversal, you want to see last week's highs get taken out. So last week we lost 2.36% on the Qs. You need to see the buyers take out the prior week's highs to show any strength before they can push it back up again. Right now, sellers clearly in control as we're getting nothing but lower highs. Okay, nothing to say about the daily. Look at the daily. It's just basically lower highs. Lower highs, lower lows. Pretty easy trading, right? The bias is short. There's your 200-day moving average. We broke below that on Friday. Okay, so let's go and move on to the next one. Easy analysis for the Qs. Russell, same thing. Monthly is now outside bar and down. Here's a scenario with Russell, right? So Russell, from the peak of August's highs or September's highs, just forget that. Let me just draw on the data right here. So it did fall from the peak of August to the low of December. It fell 27.44%. So that's bear market territory, right? So it did go on to make a bear market move, a correction. Then from December until, there we go, September until May, we had a 28% move to the upside on the Russell. So very nice retracement there. Unfortunately now, it looks like we're breaking back down. So outside bar and down, it's going after these pivots. So where does it stop, right? So how do you, it's very possible now that if the sellers keep their control, they're going to find their way to go right back down through the range again. Because here, look at the weekly chart on the Russell. Once we put in that outside bar there in May, we talked about this already, right? Went outside bar and up, then outside bar. So they took all that pivot. Now they're going after that pivot. They took it out this week, right? And now they're coming back through the range. As you said with the Qs, this is momentum now, outside bar and down. You need to take out one of these highs before you can even consider it to be a bigger reversal. So right now, the Russell lost 3.26%, 3.27%. You got to take out at least this high here before we can make our way back up again. But right now, sellers clearly in control. The only thing here is you have your Bollinger Band right there. Let's see how price reacts around that. It could do this scenario here where it pokes through and then pops up for several weeks, right? Before succumbing and coming back down again. That could be another scenario. But you want to see how it reacts to the Bollinger Band. Does it do the little Bollinger Band walk where it just keeps going down the Bollinger Bands? Or does it bounce off a bit, come back up, just to refade again and come back down? Okay. Now, on the Russell, on the 4-hour chart, so on the daily, it's pretty straightforward. It's momentum to the downside, outside bar down, outside bar down. Here on the 4-hour chart, we have shown here is the same scenario that we saw on SPY. So tricky trading because what they're doing here is they're trapping a bunch of longs. Inside bar and up, right? Until they fade it and they turn to an outside bar to the downside, trapping anyone who got long here, and they stop them out. These guys get stopped out there. Look, inside bar, this is on Wednesday. inside bar and up, right? They got trapped, they break it below, and then it's back down. They stop all those guys out. And so the market's doing their best now at stopping people out, because they lure them in the morning and they stop them out in the afternoon or in the pre-market or after hours. So that's the playbook right now. As you can see, it's been the same playbook for a while. Anytime you buy inside bars and they go up, right, you're getting edged out here because you're getting stopped out for to take you back out again. So the key is, if you're going to get short, you want to get short off of something. So you want to get short off people getting stopped out, right? So you look for the scenarios here, inside bar and up. Here, as soon as they get taken out, right there, they get stopped out, you're in the ride to the short side. Same thing here, inside bar up, right there. Here, you're stopping them out, right? So that's why you want to be getting in on corrective action, and using the opportunity where shorts are, or as long as they're getting stopped out, to get into the short side, versus trying to simply buy lows. That's a terrible strategy in a market like this, because you're gonna get stopped out all the time. If you're simply trying to buy lows, or sell lows, you're just trying to sell lows. Look, it's gonna pop up against you. If I sell that low there, it pops up. You know, so you don't want to sell lows because it's always gonna pop up. So ideally, what you're doing is you're coming off of something, either moving average, you know, whatever your method is. Just make sure that you're using corrective activity to get into the trade versus trying to chase momentum. Because right now, it's not that kind of momentum trading where it's full-blown panic and people are just exiting and you can just ride to the downside. This is, people are still trying to buy along the way. You can see it in the price action, right? You have buyers who still want to bottom pick, and you know they're getting stopped out over and over again. So use those guys getting stopped out as your opportunity to get in. Now, talk about the Dow. Rough week for the Dow. So what can we say? Yeah, I keep saying this, but it's actually not true. So this Dow chart does not show an outside month. So the Dow, out of all the indices, did not create an outside month. It is trading below this 200-day moving average. It's been that way now for, actually it's for a little while. Actually this past week as well. But it did an inside bar reversal on the month. So it never did an outside bar. The Dow's been actually one of the weaker ones, probably due to Boeing being such a highly weighted company in the index. But here, with inside bar and up, there's your reversal, right? So inside bar reversal to the downside, and went after that pivot. And this week we finally got it. We finally got, I talked about last week, 250, 246 was very likely to get taken out. We finally got that level taken out, and we got some more gaps filled to the downside there, and it moves right to the edge of that broadening formation. Question is here now, new month, new week, where do we go from here, right? So here, inside bar and down, closes right near the lows, if not right at the lows. Now this would be very interesting if the buyers can step up here and have an amazing week, and they go inside bar reversal to the upside. That'd be a very, very good corrective structure by the buyers. If they could somehow reclaim this week, that's down close to 3.10%. If they can, go back, turn this week green, crack above there, then they have a clear trajectory back up again, back through this range. But that's, again, a tall order because it doesn't look like right now there's any reason for that to happen. But let's be flexible. If something comes, shows up, and you want to be watching these weekly levels, right, to see can they take out this week's highs. If they cannot, then the strength is it's all relative. Until you have a weekly high taken out, the trend is still down. Okay. So on the daily, what can you say? It's momentum to the downside, outside bar and down. It's just going down, down, down to weekly lows. On the 4-hour chart, and I don't need to belabor the point here, but you see nothing but inside bar reversals, right? So that's the name of the game right now, stopping people out to get short. So here's the week, starts right there. Excuse me, that's not the week, right here, yeah. Inside bar reversal, back down, right at the lows. Okay, so continue to watch that play out. So that's the pattern right now, and you want to keep seeing if that pattern continues to play itself out. One of the big things this week was obviously it was UKOIL. So oil really got hurt this week, and so I was talking about it in last week's video that you want to see, can UKOIL keep this condition? It was outside bar, inside bar, and up. If it cannot keep 68, 67, then this condition fails, and it certainly failed. And it's no longer in that it's not playing out anymore. So now you had the outside bar and down scenario, right? So once it cracked 68, 67, then it took out the weekly lows of the prior week, and now you're outside bar and down. So that's momentum to the downside. And these bars look very, very nasty because they're really, really big bars. 7% down that day, and then 4.6% down on the day prior. So on the 4-hour, it's nothing, it's momentum. So you can see here, once it breaks down, this is momentum trading. You can just see, so it goes bar after bar. You're getting nothing but lower lows on the bottoms and lower highs on the tops of the charts. Here, when it goes inside bar down like that, that's pure momentum. So that's momentum move now. And so momentum can't last forever because you have to continue to attract new sellers in. So you want to see now, is there going to be a bounce? Because, and the bounce may not even be that significant because this is such a large bar. Then all likelihood, the best that buyers are going to be able to do, unless something amazing happens, is that they create an inside bar for this coming week, because this is down 11% for the week. So you really have to go back here, there, and there. Back in December, we had similar 11% down bars. The next weeks, right, you may have a little additional selling, but usually it is less intense of selling than it was that same week. So here it goes outside, goes large selling bar, then down, but then it comes back up again. Large selling bar down, but then they take out the highs here and it comes back up a bit before they sell it again. So eventually momentum runs out, and then if the buyers can break the highs here, they're temporarily in control until this inside bar here creates equilibrium, and they take it back down again. So oil certainly no longer the catalyst it was before. Now oil stocks especially have been getting hurt. Well, they've been getting hurt for a while. We've been showing the disparity between oil stocks and oil, and so now it looks like there's a reason for that. Oil equities are looking really, really rough in terms of their tape. Let's talk about long bond, TLT. So long bond looking really, really strong, and this is something we've pointed out for a while now, that you want to watch out for this outside inside situation. Once this outside inside goes up, we talked about it already. When it went up there, they're going after that pivot. So this past week, they took out that pivot, and I said, actually it was the week prior they took out that pivot, and I said, what's the next pivot there? It's these, and they did it in 1 week, in 4 trading days. So there's certainly a rush to quality right now. Traders are rushing into U.S. currencies where they believe there are U.S. treasuries where they believe there's security and safety. And so that closed right at the edge of that broad information. So, if you don't believe in broad informations, then at a certain point, if you see enough of these charts, you tend to become a bit of a believer because they tend to track very, very well. So it's right at the edge of that broad information now. Now the question is, where do you go from here, right? Can you crack above that broad information and keep going? That's what you have to do. Otherwise, it's going to pull back in. It's kind of like a Bollinger Band. It needs to stay up and stay above and trade above. Otherwise, you come at risk coming back through the range again. So right now, the trend is up though, right? Although kind of extended. However, there is no limits to how far people are gonna to buy things or sell things. So just I rarely try to hesitate ever using the word, oh, this is oversold or overbought here, because if there's a panic, or if there's a mania, people will buy more and they will sell more, and price will get to places which you did not think it could get to. So at this point, you're simply following the price. Right now, it's momentum. What we do know about momentum is that, as I said in the last chart, is that once momentum leaves, then there's going to be a pullback. So right now, look, outside bar and up, that's momentum. Okay, so we need to see the buyers continue to buy here. Otherwise, it's going to pull back because, here's a good example. This is now doing the Bollinger Band walk, right? So here, it's climbing the Bollinger Bands. So there's your classic Bollinger Band walk. Once it runs out of momentum, it falls back in. So look, here's the last Bollinger Band walk to the upside. Bollinger Band walk. Once it runs out of momentum right there, it breaks that low. Boom, comes back in again. So watch for that right now. So we have the outside bar going up. We might get more up bars. Once a low gets taken out, you can expect it to pull back in. Not saying it's going to collapse and price is going to break down, but then you can expect it to come back into here again. And we want to see, based upon time frame alignment, how price trades around those important levels, the opens. Okay, but right now, long bond had an amazing move. A pretty big month for the month of May, 6.65%, right? And that was even bigger than the month of March, which is already a decent move. So now we have a good understanding of why people are going into bonds, right? With all the geopolitical risk out there. Now Trump, there's the Iran situation. Now Trump decided to tariff Mexico. the bonds are signaling something to us that we now understand. This is why, sometimes it takes time before we can truly understand the big picture. But clearly there were other traders who were ahead of the game, and based on having more information than other people, and there's a reason for these bond moves. And now we're learning over time what the reason is. But as I said before, as traders, we don't have to worry about the news necessarily. We knew the condition already, that it was coming back through the range, and that once this got taken out, there's a very high likelihood of it to keep going. So again, sometimes we just need to let price lead, and we just follow it. Okay, let's talk about emerging markets. The submerging markets continue to sell off. Well, this past week it actually took a bit of a respite. This is actually a bit of it's an interesting point that we need to watch, because it is notable, because we did have that outside and up scenario here that turned into an outside up and then down, which took out all these pivots. But this past week, if you look at EEM, we actually had a green week. So we started off the week red, had a red bar, and they fought back. So now you're banging right against the bottom of this broadening formation. So goes green, green, and now outside bar on Friday. So came back down to the weekly open. End of the day, I was an outside bar to the upside, creating a green week. This actually takes out the prior week's high. So this is kind of what you want to see now in order for there to be some sort of reversal. This would just simply be an up-down reversal. I prefer to have a reversal where you're actually stopping out more people to really make it a solid bounce, to really make it stick. But we get to continue to watch price action, because right now it's outside bar, right? So what is it going to be? It's going to be outside bar and up, outside bar and down, or outside inside. If it goes outside bar and up, and then it fails, then you're going to have the same situation you had here. Outside up and then back down again, potentially with full time from alignment. So that's what you got to watch out for, because if bad news comes out and it goes outside bar and up on good news, and all of a sudden you have bad news over here and it goes down, you're going to cut back through the range once again and go back to your old selling ways. So something to watch out for here. On the 4-hour chart for EEM, you have, well, let's take a look at the 2-day chart first. Same type of scenario already playing out, right? So outside bar and up, you do not want to see this low get taken out, because if it goes outside bar and up and then takes out this low, you're coming back through this range again, and then you're going to set up more selling. Now on the 4-hour chart, you have this scenario, same thing, outside bar and up, kind of weak. So you want to see, can it keep going, or does it fail and then come back through the range here? And again, the week and month are going to open up somewhere around here. Now you need to see where it trades in relation to that open. So it may take a couple of days for this to play out. Monday is going to be a fresh week and month, so it's going to create whatever it creates. But on Tuesday, again, it's going to be your second day of the week and month. That's going to show you, can the buyers continue to show strength, or do they begin to pull it back down again? Okay, now let's talk about Bitcoin, because Bitcoin, it has been on a roll until the past couple days, but it's again finally it hit the targets we've been asking for. So if you follow along with me on that ride from 42.10, I did take some off here when it took out that pivot. That was one of my major milestones. That was the easy trade. So basically we rode it from 42.10 to 85.0670. And that was an easy, that was the easy pivot. Those are the easy pivots to go after. So that was a really, really nice run there. A nice +9R trade on, on the monthly chart. On the 3-month chart. Nonetheless, I did take that trade on the monthly chart, but sorry, even more than +9R on that particular trade. That was just simply on the last intraday entry. But yeah, it was a good trade. So now the question is, where does it go from here? So now that it hits some of the easy pivots, this gets trickier, right? Because now you're going into highs, and these pivots that to go after become slimmer and slimmer and harder to go after. So that's a clear pivot here, 99.90 around the 10,000 level. That's what everyone's looking at now, 10,000 Bitcoin. And can the buyers continue to push it? This is the issue. Now you're talking momentum to the upside, because here on the weekly chart you can see it, right? Inside bar. So it starts here, right? Outside bar. Actually, it starts even further back, right there. Outside bar. The outside bar, right here. it goes outside bar, and there's no lower lows until this week here. The 25th of March, that week, had a low that broke below the prior week's low, but then they turned it to an outside bar. So the bars quickly recaptured the momentum, stopping out anyone who got short in the process, and then broke above the prior week's high. Then, since the week of March 25th, you've had nothing but higher lows. Each bar's low is higher than the prior bar's low. Here now, here's the issue. Now you're at this week here, and this is the first red week in some time, right? So the first red week since that one there, April the 8th. This is your Bollinger Band walk, right? So there's your Bollinger Band walk. Now, can Bitcoin continue to do the Bollinger Band walk? Because we know that if you cannot do it, and it takes out this low, you're coming back in. I'm not saying it's going to retrace all the way back down to the 2000 level again. Or that's right, that was 3,000 something. But if you do break below this area here, then you have to watch out that it's not going to come back deeper in to find some more buyers to perhaps step up and support this thing. So right now it's a momentum environment. So continue to watch for that. You have the weekly, the month, it's a fresh open right there. On the daily chart, you have this outside, inside, and up. I'm not taking this trade for the reason because we have a new week coming out still, and right now there's your purple line. That's going to act as resistance for you. Now it could be what happened last week. Look what happened last week, right? Right before the new week started, they cracked it and went outside bar and up. Unfortunately, that's a lot of momentum. As you can see, what happened, it petered out. Went outside bar and up. As soon as it takes us out that low, it runs out of momentum and they fall back in, right? So the buyers are still in control though, because look, they stepped back up again and did an inside bar. But if this thing breaks down here and does an inside bar reversal, right now you're still inside this bar. So basically it's an inside bar situation here. You can potentially break down here, take out that, and take out that. And then if you take out those, you potentially take out right that there, that'll turn the week red, right? So that would turn, you would break below this area here, 4079. 8,005. That puts us right here. The low here is where's our 8,000? Yeah, sorry, I'm over here. The 8,005 area. So that area here, 8,005, is significant. If you take out that low there, so if you do some sort of inside bar reversal scenario here, and it breaks below 8,005, then that will break below the prior week's low, and then you have the chance for a deeper retracement. So the easy trade is done for now. Let's wait for let's see what happens with this weekly chart to see where it goes from here. But on the 2-day chart on BTC, same thing. Outside day, outside, inside, and let's see how it plays out. Sorry, a bit of tech issues there. The indicator was not showing up. So there's your outside, inside on the 2-day, and now you want to see, can it break below 8,005, or does it go outside, inside, and up and continue the momentum run to the upside? Once we get a new week here, I may take this to the upside. But again, we're trading in a momentum environment, so you want to be definitely, if you take the trade, you want to be monitoring for continuation and making sure the momentum keeps going up. Otherwise, you're going to have potentially steep pullback against you. All right, let's talk a few more charts here because we are going long this week. Let's bring up total. The index that tracks all the cryptocurrencies, and it looks a lot like Bitcoin. So at this point here, momentum to the upside. Look at the weekly chart, same sort of thing, outside and up, doing the Bollinger Band walk. You simply want to watch again these weekly lows. Can they get violated? If that's the case, then you're losing momentum. You can expect a steeper pullback. On the daily, on the 2-day, same scenario. Outside, inside, outside, inside. So once again, watch out that this low here, for that level there, to not get taken out. That's basically your big outside bar there that was put in this past week. Now, I'm going to flash through a bunch of charts, and we're going to take a look at some of these other charts we've been talking about. So let's take a look at, last week I talked about 4 charts that were interesting. AMAT. So these are all charts that we're looking at on the monthly that have potentially good levels to go after. AMAT, so here we go, outside and up, coming back down to the range, going after that pivot now. Great one to get short on, AMAT. CRZO finished. Let's see, CRZO here. It did its job outside it and up, broke down, and now took out that week's low there. Okay, so that was 991. It took it down to 981. ETFC, another nice one. So on the monthly chart, still has a bit room to go. Great one to get short. Outside and up, broke back down below there, and now to the downside. Okay, so here you go. For instance, so this low here is 46.89. 46.89, yeah. So I can draw in the 46.89 area there. As soon as it breaks below 89, you're looking for entries to get long, short, excuse me. And there's your pullback right there. All right, so this area here, you can pull that back, and this day here, you want to be looking for entries into that outside bar. So, and the last one was GS, Goldman Sachs. This one did its job outside up and back through the range and took out that pivot and heading lower now. So GS, really nice one to have gotten short of this past week. How do you get short these things? Again, you're going to be look for lower time frames to try to get involved. You can use whatever method you use to try to get short. The idea here is you want to be my suggestion is to use pullbacks to get short these to get short any one of these names, because now you're trading full time from alignment to the downside, and you have a clear pivot to trade after. Once it hits that pivot, let it trail, keep a portion, let it trail, and see how far it can go for you. So here's another name that's interesting, CSCO. So on the CSCO chart, bring it up here. Actually, sorry, this one here, outside bar and up, ran out momentum, coming back through the range now again on the 3-month chart. But what's more important is the weekly chart. It simply ran out of time on the week. So here, CSCO went outside bar inside, broke down this week, and it's going after that pivot here now. So the pivot there, 5106. Look on a lower time frame chart to try to get short CSCO. Okay, so this simply ran out of time. It's just a matter of time if the markets keep selling that they're going to take out that low, 5106. Another good one to get short, data. So here's one here, outside bar and up on the 3-month. It broke below that low here, right there, 114.81, and now there's the opportunity to get short. Inside week this past week here now, using pullbacks to get short this name data. One more to share, maybe actually a couple more. Let's do 2 more. Citigroup, another name to watch. Outside and up, took out that low. Now they're going after that pivot there. So continue to watch Citi. Financials looking like they could break down further here. So outside and up, coming back down through the range. And last one, so CRM here has actually earnings, I believe, on Tuesday. So watch out for this one. You don't want to get too short, too aggressive, because they do have earnings coming up. Something to watch out for. If they miss, then this is not the season to be missing, because they're going to punish you. So outside up and very close to taking out that pivot right there, 150.25. So watch CRM. It is kind of the banner name for cloud companies in the enterprise space. So if this thing breaks down, watch out tech space. So that is your weekly market outlook. I hope that you trade well this coming week, trade safe, and most of all, happy trading. If you have any questions, you know where to find me. All the best.